The news and social media are full of conflicting information and outright falsehoods when it comes to insuring a Florida manufactured home. Want the real story and the straight skinny? Stay tuned. Can a manufactured home community in Florida make your retirement dream come true? I'm Russ Watson. Join me as I share over a decade of experience helping folks who are living in or looking at this active lifestyle. Manufactured home insurance is a key component in the decision to buy a Florida manufactured home and live in a Florida manufactured home community. Folks looking at Florida mobile homes for sale often think they can't even get insurance. There is a lot of bad information out there. So today we have representatives from one of the top agencies in the state to bring us up to speed. Professional Insurance offers Florida manufactured home insurance all across the state and has done so for decades. They can also help you if you're looking for quotes on Florida mobile homes for sale. Don't miss this opportunity to get the straight skinny from the guys who deal with this every day. And whether you are a current manufactured homeowner or are planning to purchase in the future, you'll want to stay with us for a few tricks you can use to reduce your policy's premium. Let's dig in. So without further ado, let's welcome Bryce Mednick and Cody Hamlin of Professional Insurance Systems of Florida. Bryce, I would normally ask how you got into this business, but looking at your website, it's apparent this is a family endeavor. Tell us a little about the company's history and your family's involvement.
Professional insurance, we've been around since 1990, family owned and operated. My grandfather and father actually started the company together way back when. Funny enough, my grandpa owned a hot dog ranch, and somebody came into his Howie's hot dog ranch and recruited him to be an agent, and kind of the rest is history. But been around since 1990. We're the FMO's preferred provider, which stands for the Federation of Manufactured Homeowners, and this is what we do.
So Cody, tell us how you came to this organization and what your duties are today.
Yeah, so I've actually known Bryce since I was probably like 10 years old, and I seen, how well he was doing in the insurance industry, and I kind of just hit him up one day and was like, how do I get started? And now here I am. I work in the office. I'm pretty much like his new business assistant. I help write a lot of the citizens policies and help with the home and auto side in-house here in the office, as he's more so like out in the field going to people's homes. I'm like on the back end doing some processing stuff like that.
Right-hand man.
All right. So let's get to the number one question I get asked all the time. Can you get insurance for manufactured homes in Florida?
Yes.
Absolutely.
And as a follow-up, how about mobile homes built before 76 and park models, both HUD and RV, located in RV parks?
Yeah, so we can insure any age home. The only qualifying thing that you'll have to do is pass a 4-point inspection, which checks your roof, plumbing, AC, and your electrical panel. As long as there's no leaks, no hazards present within that 4-point inspection, Citizens, the state of Florida insurance company, pretty much has to take you. So they, again, will insure any age home.
I don't know how much you know about park models, but there's two kinds. One is a HUD home, so that's built to HUD code and would qualify as a manufactured home under the definition. The other is really an RV, and it's built to the RV code. Have you ever insured any of those as RVs, or can they actually be insured as manufactured homes too?
So it kind of depends. Actually, we just had a case recently. So if it has wheels, if it's parked, it's going to be insured as an RV. If they remove the wheels, it will be insured as a manufactured home. So it kind of depends if it's on concrete block or if it still has the wheels to move the home itself.
What are the variables that determine the cost of insurance for a home?
So the variables would definitely be number one being location. Aside from that are going to be the age of the home, the year it was built, the amount of coverage you're putting on the home, your deductibles, Those are going to be your main key factors, but the location of the home is probably going to be the number one thing that's going to, determine the cost.
Now, with age, I'm familiar with the price points of pre 76 non HUD code and 94 HUD code revision. Are there other price points that are kind of inflections? Like, is a 2007 better than a 2004?
So depending on the company, there's different kinds of tiers with a lot of these companies. So for example, with American Traditions, they have three different kinds of policies you can buy. You have an SA, an SSH, or a DP1. An SA is the top tier. They're going to give you full replacement cost, full coverage. A step down from that, you're going to have the SSH. The only difference there is you're going to have you're only going to have replacement costs on the contents versus the home. It will be actual cash value on the actual dwelling of the structure. And then you have the DP1, which is just basic coverage. So you're going to lose your theft and your interior water damage. Interior water damage is the number one claim in Florida, believe it or not. So it is kind of important to keep that. But as you go down these tiers, it's going to get more expensive. And then when you hit the bottom tier, it does get a little less expensive because you're removing theft and that interior water damage. But from, that 15-year period to be in that SA policy, it's much cheaper than being, 16 years old. So it does make a difference there.
Are new or almost new homes much less expensive to insure?
So yeah, so there's a say we insure a 1975 home for 100,000 and we insured a 2020 home for 100,000. It's going to be a lot cheaper to insure the new home. We could probably bump that up to 200,000 on the new home and it'd still be about the same price versus, insuring a 1975 home for 100,000. So a newer home is always going to be a lot cheaper, and you are able to get a lot more coverage. So the only reason that a newer home would be more expensive as far as that goes would be they probably have a lot more coverage on the policy.
So, can you talk a little further about where coverage is more expensive based on location and where it's cheaper? I know, I did a little bit of study that kind of compared some homes with ATIC coverage around the state, and there were some surprises. But boy, when you got to Miami, it was crazy. What's your experience with the better locations, the cheaper locations, the more expensive, and the outrageous?
I'll add on that. So I'd say as more inland you go, generally it's a little cheaper. When you're closer to the bays, in these hurricane prone zones where there's possible flooding or special flood zones, that's where you're going to see those more expensive rates. Like I know in certain parts of Naples, some people are paying like 5, 6 grand a year for pretty basic standard coverage, just to where you go into the middle of Florida, like Orlando area, maybe it's a lot less expensive. So I'd say closer to the water, it's probably going to be a little more expensive.
Closer to the water and the farther you go south, it seems, up here and, Palmetto, closer to the bay, you might get a policy for 1,500. You get down to Naples, Fort Myers, like Cody was saying, you're paying upwards of 4 or 5 grand sometimes. So it gets pretty crazy the farther you go south.
Yeah, yeah. Um, what is the difference between actual cash value and replacement cost policies? And can you get both?
So the difference there is actual cash value is going to be the stated value of that item at the time. So if you have a couch that's 10 years old and it was once worth $1,000 and now it's 10 years later and it's only worth $100, the company's going to only give you the what it's worth, $100. If you have replacement costs, they have to give you what you paid even though it's 10 years old. So replacement cost is always going to be better in that aspect.
So I had a person contact me who said they had a actual cash value policy and a 10-year-old roof, and this was under Citizens, and the roof suffered significant damage, and they ended up only paying a couple of $100s to replace the roof. Insurance covered the rest, which seemed kind of weird. Would you have any explanation for that?
Yeah, so Citizens is one of those carriers where it really comes down to the eye of the beholder. So, for example, like the adjuster going out there, they're determining, hey, to replace this roof, it may cost 20 grand. Then they go in, they have some sort of formula that they use to say, okay, here's your payout of X amount. Citizens is kind of a unique carrier in that aspect, just because all these adjusters, they're all different. So you never really know exactly what you're going to get. Sometimes you may get, more than what you were expecting, which that's great for the client because, hey, you're paying for an actual cash value, yet you're receiving almost sounds like for this guy or girl a replacement cost value. So it's kind of a you never really know kind of thing, but at the same time, the standard protocol, the replacement cost versus actual cash value, that still comes into some sort of effect there.
And so actual cash value and replacement costs affect both the home itself and the contents?
It can, yeah, absolutely.
Okay. And does that vary company to company, or is that kind of a universal thing? You're going to get one or the other?
It kind of varies company to company. You can sometimes pay extra. So for example, with Citizens, you can pay an extra fee to have replacement costs on your contents. With American Traditions, it's something that's kind of just included based off which program that you're put into. So if you're on their DP1 program, it's just going to be straight actual cash value. You can't buy replacement costs. If you're on the SSH, you're going to get replacement costs on the contents, but actual cash value on the home. And if you're on their SA Signature Adult program, you're going to get full replacement cost. It's not really something you get to pick. It's based off the age of the home, at least with them. So, like I said in the beginning, it kind of varies company to company.
Does your credit score affect your cost of insurance?
So with the credit score, it really doesn't affect the homeowner's insurance. However, it will affect car insurance. So not so much on the home, but definitely affect the car.
How about land lease in a mobile home park versus homes on real property or in a co-op? Does this affect the cost of insurance? Are they different?
No, that's not a question when doing an application or anything like that. It will not affect the cost.
We often hear about Citizens as the outfit of last resort. Can you talk a bit about where Citizens came from, what it is today, and who they're insuring?
Yeah, so Citizens, yeah, they are essentially like your last resort for insurance. I don't remember exactly when they were established, but I know they were established because of all these older homes. They couldn't find regular insurance in the private market. So Citizens kind of steps in and helps these people that, hey, you have a 1976 home and you're looking for wind coverage. Currently, right now, unless you go to the surplus line side, which is a non-admitted side, meaning it's not backed by the state of Florida, Citizens is an option for you to still obtain that coverage with wind. So they're great for that. Luckily, we have them because without them, a lot of these older manufactured homes, they'd be forced to go to that non-admitted side. So we're thankful for Citizens for that because at least we're able to give a option for someone with an admitted carrier and they're backed by the state of Florida to obtain wind insurance or coverage for hurricanes. And being in Florida, that's probably one of the biggest fears for a lot of people is these hurricanes.
Absolutely. And just to touch a little bit on what he said about surplus lines carriers versus admitted, an admitted carrier, like he said, is backed by the state of Florida, meaning God forbid the company ever did go out of business, you are still protected by the state of Florida for your claim. If you're with a surplus lines or non-admitted carrier, if they go out of business, they can legally walk away without paying your claim. So a lot of people, get into these policies and they don't even know because the agent didn't explain that, hey, this is a surplus lines carrier, hey, this is admitted. So we always like to go into detail and kind of explain to people and let them know what they're actually paying for.
That seems like an important thing to know. So, an admitted carrier is essentially guaranteed to pay off, but a policy written by a surplus line or a non admitted carrier is not. Yep, that sure seems important. Is the number of private insurers in Florida for these homes increasing or decreasing?
I'd say maybe in the single family home side, your brick homes, it is slowly increasing. There's new carriers coming out. Mangrove was a recent one that I'm sure a lot of people have heard about, but they're only insuring single family homes. As far as the manufactured homes or mobile homes, I'm not too familiar with too many newer carriers coming out.
I have a friend that had Citizens recently and received a notice that a private company had picked up his policy and his rates were going to go up 20%. And he basically didn't have any choice. How does that work?
Well, so with Citizens, I think what you're referring to is what's called their takeouts. So Citizens being the last resort for insurance, if there's another private carrier that's going to be taking out his policy, meaning essentially they're buying that policy from Citizens, um, they have to go to it if it's within 20%. Now, if this new carrier that's taking them out is charging more than 20% as the estimated renewal premium, they do have the option actually to stick with Citizens versus, just go to the new carrier. So that's their thing is they have what's called the 20% rule.
Okay. What happens when a company just declines to renew your policy? They drop the line, they go out of business, whatever.
I guess it depends on the scenario. I mean, there's a number of reasons why a company could, non-renew someone. Maybe that company is just leaving that area, or maybe they're not doing business in Florida anymore. I'd say it really depends. Ultimately, if that happens, your next best bet is to try and shop it around to other carriers that are out there.
The last statistic I saw, which was 2018, but still probably close, maybe worse, was that only 30% of manufactured and mobile homes in Florida were actually insured. I imagine that's mostly based on cost. This seems rather risky if you have other assets. If you don't have any other coverage, can you get liability only or liability without wind coverage for your home so that at least your assets are covered if the neighbor's child falls in your front yard or whatever?
Absolutely. And that's something that we do push if people don't want to pay for the hurricane. We understand it is expensive. So we always do like to let people know there are policies out there that will cover you, not just for liability, but also fire. God forbid the place burns down. And oddly enough, generally the fire and liability policies are cheaper than just the standalone liability. So you actually get another peril included, covered for less money in most cases. Those policies are cheap. They run you maybe between 2 to 3, maybe $400 a year. Some of these can even include interior water damage, which I mentioned earlier is the number one claim in Florida. So that can also be a covered peril at an additional cost, of course. But even with those, you're still under, $700 for the year, and you're covered for fire, liability, and interior water damage. So if you don't want to pay for the hurricane, there are other options out there, and absolutely protect your assets.
And you can get that even for older mobile homes?
Yep, yep. So again, citizens will write any age, but private insurance companies will write X when going back. American Traditions, for example, will go all the way back to, I believe, 1970 on the X1 side.
That's super important for folks to know, I think.
Absolutely. No, absolutely.
What is the best way for someone who's looking to come to Florida? They're poking around, looking at homes. They don't know anything about insurance other than what they read in the news, and that's pretty non-factual.
Yeah.
Um, what's the best way for those folks to determine the approximate cost they're going to pay for insurance on a given home so that they can compare several homes in different areas and decide what works for them?
Yeah, hey, I mean, I have people call me all the time that are looking to buy homes and just ask for quotes, and we're happy to run you quotes here. It doesn't matter if you don't end up buying the home. If you're just trying to get some price points, that's fine. It takes us 5 minutes to run a quote, so it's just call us, we'll run the quotes for you and kind of give you the options.
Wow, that's great. I look at real estate quotes quite often, and they sometimes include estimated insurance, and that always seems really low to me. Can that be because they're using the numbers from an existing policy that maybe you aren't going to get?
What do you got on that?
I'd say it's possible. I mean, I don't know what they're basing their numbers off, but for example, like when we're say like someone calls us and they're like, "Hey, I'm thinking of buying this home," we're still going to need the basic information on that home, like the year of the home, the length and width of the home, what attachments specifically to manufactured homes. Is it your primary home or is it going to be a seasonal residence for you? Those things, we still need some sort of basic information to run these quotes. When you're looking at those real estate quotes, I'm not sure exactly how they're coming up with those numbers. It could just be like a database of information they have in this area. This is the, estimated cost of insurance.
So far better to get a quote.
Absolutely.
Absolutely.
Yeah, and that's interesting that you bring up full-time or part-time occupancy. I wasn't aware that that would change the cost too.
Which is a new thing. Citizens just recently did this, and they're really the main one that it has an effect on. If you are seasonal, it's about 30% higher on your premium versus if you are a full-time resident here.
And to add to that, what we've seen with a lot of these citizens policies for people that already have citizens, you have to prove to citizens that it's your primary home. Otherwise, they're going to default you to that seasonal residence and hit you with that additional surcharge. So we see people constantly that, they never reached out to their agent or the agent never reached out to them and they're paying this seasonal residence fee when they really shouldn't be because it's their primary home. That's something we like to try and stay on top of and make sure, the client's receiving all their discounts. They aren't paying for some nonsense surcharge that they're really not, it doesn't pertain to them anyways.
Exactly. And 30% can add up on these policies.
Oh yeah.
Oh yeah, 30% of my policies more than a good dinner. I'll tell you, it's a lot of good dinners.
Exactly.
Now,
Exactly.
I noticed when I was going to shop around for insurance a while ago. I have American myself, and I've had the policy for a while, and it's a 1986 home. And what they told me was, don't ever let go of this policy because you'll never get it again. So I can't transfer that policy to a new buyer, right?
Exactly. No, no, you wouldn't be able to transfer, unfortunately. You are grandfathered in on that plan. So if you left it, you would not be able to go back.
Right. So there are a lot of people in my neighborhood who have either given up insurance or who are considering it because seniors, retired, fixed income, you know the drill. You only got so many dollars a month and you've got to pay the rent. So you're looking at insurance. Now, we'll get into a little bit later how they can maybe cut their bill. But one piece of advice I've given them is if you have an older policy that is a whole lot less than what you're getting quotes for now, you also have to consider holding on to that because that's almost an investment.
Yeah, yeah, very true.
What is your experience with what lenders will require for insuring a financed home?
Most of these lenders, they're going to want to make sure that home is insured to replacement costs. So when we're running, for example, with Citizens, quotes with Citizens, we are running what's called a replacement cost estimator. We're inputting, the year of the home, the length and width of the home, the size of your attachments, all these things, and it spits out a number saying the estimated replacement cost is 100,000. That mortgage carrier, they want to make sure that if that home's totaled, we have it insured to replacement costs. So at a minimum, with the insurance money, they'll be able to rebuild a new one and still maintain, the mortgage and the insurance on that home. Essentially, is the big thing of it. They want to make sure it's insured to replacement costs.
So does Citizens limit the amount of insurance you can get? Because a scenario I see quite frequently, especially with older homes, is you get say a 1990 home and somebody's put in granite countertops and new flooring and redone all the walls, put a brand new roof on, a new air conditioner. The bottom line is that home's now selling for $130,000 and it's in gorgeous condition. But when they go to the insurer, is there going to be a maximum they can insure that for based on age?
Maybe not specifically based on age, but a number of things, yeah. So, like I said, that replacement cost estimator, it could say based on, the features of this home that we've inputted there, the minimum they'll insure the home for is 50,000. And if they're selling the home or someone's buying this home for 200,000, even with Citizens, we can increase that 50,000 up to 150%. That's still not going to get us to that requirement or the amount that the client is buying the home for. So the replacement cost estimator, yeah, it can limit it, to what the amount we can insure the home for.
And to touch on that as well, it's a little bit different with different companies. So for
Yeah.
example, Citizens has the replacement cost estimator as to where we put in basically the features of the home, your built, all that stuff, and they kind of tell us what we can insure the home for. Versus American Tradition, it's the year the home was built times your square foot times a dollar amount. So for example, if you have just a 1970 home, they're only going to give you $35 a square foot. So it's going to be, your square footage of the home times that $35, and we're only able to go generally 5,000 above that figure. So the year built can kind of differ with certain companies.
So it seems like if you're looking to finance the home, it's even more important that you get a quote ahead of time and find out if you're falling into some sort of insurance pitfall there.
Yeah, I mean, with Citizens, the lender kind of does have to go off the replacement cost estimator, which is kind of nice. So even if we can't get the value up to say that 130,000 that you mentioned previously, the lender kind of has to go off what Citizens came back at. So it's not always a huge issue.
Yeah, but it would seem like then the lender's going to come back and say, "Hey, I'm only going to give you X amount of mortgage money or lend you X amount of money because that's the most they'll insure it for." Uh, and maybe there's 20% above that, whatever, but somewhere there's got to be a limit.
Yeah, and each lender they can vary a little bit. Like some lenders, they'll say, we have to have an insurance policy for whatever mortgage amount you have or loan amount. So it kind of varies on the lender as well.
Hmm. Okay. Do some policies still exclude carports or external buildings like sheds or screen porches?
For the most part, I think everybody now covers
Yeah,
the attachments.
I think I know this has been talking up a lot lately. Citizens, they sent out this letter and it's talking about other structures not being covered for carports. But when we're looking at other structures that's things that's detached from your home. So like with Citizens, your carport and the shed and all these attached structures, they actually fall under your dwelling amount, which is that coverage A on your policy. But that letter, I know that's probably maybe where this question's come from, is that letter we've seen a lot recently, and people are getting concerned, like, oh, my carport's not covered. Well, it's not covered under other structures, which would be something detached, so a lot of times they're good.
Yeah, and to touch on that a little bit too, Citizens, as Cody mentioned, all the attachments are under your coverage A. For example, American Traditions, they have all their attachments separate. So you actually have to label those attachments separately on the policy for them to be covered, which I've seen horror stories because sometimes agents don't ask about the attachments. And what's the first thing that's going to go in a hurricane or windstorm? Probably your carport, screens in a screen room, whatever the case may be. So very important you get those things covered.
Can you describe the role of the insurance agent in all this and what an organization like Professional Insurance offers the consumer?
I would say our role as agents is obviously number one, to find the customer the best rate. Number two, to make sure the customer knows what they're purchasing. We chatted a little bit before we started today, and I mentioned I've run into policies where people will sell customers single family home policies on a manufactured home. So, God forbid they had a claim on that policy. The policy was written for a concrete block home, not a manufactured home. That could be a big problem, and then you're stuck suing your agent. So, number one, making sure we get the best cost for the client. Number two, making sure we're doing the right thing and taking care of the people.
And when disaster strikes, do you call the agent, the company, or both?
You can always call us. We'll be happy to put in claims for you. And one thing we kind of take pride in is we'll fight for you on our side. You know, a lot of agents don't call you. If you call them, they don't return your phone call or they won't help you with your claims. Well, we don't mind reaching out to these adjusters and kind of battling with the companies for you on your behalf. It's part of the process. So we've been able to get people a lot more money in a lot of cases just by making a couple phone calls, you know.
I was looking around your website and I see you offer other types of insurance. Is there any advantage in combining insurances? Can you do that?
So down here in Florida, unfortunately, there's no manufactured homeowners insurance company that also does auto insurance. So there's really no discount there. However, if you say had a auto policy with Progressive and you also had a mobile home or a motor home, something like that,
Or boat.
or a boat, then you could get a multi-policy discount there. But as far as a mobile home and a car, there's really no multi-policy discount. Some agents will tell you there is, but it's really just a homeowner's discount that's on your policy. So some people like to get tricky.
Well, it seems like there's some advantage to having all your coverage under one agent anyway, even if they are separate companies. You've got one person to call.
Absolutely. It makes it easier.
So I personally need to shop for health insurance this year. I'm paying something north of 350 a month,
Wow.
and the coverage is excellent, but I don't come anywhere near using that amount of services. Is that something professional insurance handles as well?
Absolutely. So we represent all the big carriers out there when it comes to Medicare supplements as well as Medicare Advantage. Sounds like you're probably on a Plan F.
Yeah, I am. Yeah.
Okay, so just to touch on that real quick, a Plan F is a Plan F is a Plan F. It doesn't matter which company you're with. A Plan F is the Cadillac plan. It's going to pay for everything when you go to the doctor or hospital. The only difference in a Plan F with company to company is going to be your cost. So it's definitely an advantage to shop that around.
Well, I'm guessing this is an area that a lot of our viewers, especially those that currently own manufactured homes, would like to hear more further. So maybe I'll try and talk you into a separate podcast on that one. What are the areas of the state that professional insurance covers?
We cover the whole state of Florida. So it doesn't matter where you are. If you're in Florida, we can cover it.
Sounds like you have it covered. Let's get into how folks can reduce their annual insurance costs or adjust their policy by reducing coverage in order to still make it affordable to have some insurance. But first, I want to let folks know about the resources Florida Manufactured Home Living offers to current and future buyers of manufactured homes. If you're still with us, then clearly you are interested in Florida mobile and manufactured homes. I built Florida Manufactured Home Living to offer education and resources to current and future owners of manufactured homes in Florida. There's more to this than just insurance. Do you want access to all of my resources? If you are considering this lifestyle or currently live in a Florida manufactured home, I suggest you join my inner circle. It's absolutely free, and I will immediately send you my resource guide with links to dozens of valuable information and service providers that you can use to get started. Just open any browser and enter gotoinnercircle.com. That's all one word, gotoinnercircle.com. Okay, we're back with Bryce and Cody to talk about how you might reduce your insurance costs. So let's start with an example where I own the home or I've picked out the particular home as the one I want to buy. I already have in mind full coverage at replacement cost, including wind. Are there also discounts available, and does it pay to shop around between companies?
It definitely pays around to shop different companies. For example, American Traditions, I know they give you a discount if your community is a gated community, or if you have a fire extinguisher, a smoke alarm, or an AARP, or AAA, or FMO member. Those are all policy discounts you can receive on your policy. Citizens, they give you some discounts if you have a fire alarm or a burglar alarm that reports to a central station. The big key factor, it has to report to a central station. So like we have to provide a certificate showing that it provides, it reports to that central station. So there are some things you can do within your policy to, make sure you're getting all your discounts. That's kind of like where we like to help out and make sure people are receiving their discounts. It's really just, asking the right questions.
On the other end of the spectrum are folks who decide to self insure or believe they can't afford any insurance at all. Would you recommend a liability policy? We touched on that earlier.
Most definitely. Yeah, most definitely. At least protect yourself and your assets. You never know. People are so happy anymore. If somebody comes over to your house and trips and falls coming up the stairs to get in, and probably going to sue you. So I would always recommend to, protect yourself. And like I said earlier, it also comes with fire. I've seen a few of these homes burn down. If they do light, they go quick. So it's definitely something you want to have covered.
Yeah, fire is probably, yeah, past hurricanes, fire is definitely the number one danger to mobile homes. Are
Absolutely.
there ways to reduce the cost while still having coverage, like no win policies or insuring for less than full value, higher deductibles? What are some of these, and how might people save that way?
Yeah, I mean, definitely. I'm kind of reworking your coverages, maybe taking higher deductibles, so you still have, some sort of coverage just in the event of a claim. The You're going to have a higher deductible, so you'll pay a little more up front, in the event of a claim, but your premiums for the year are going to be less expensive. That's a big one that will help. And then same thing with the actual cash value versus replacement costs. I know on a lot of citizens policies, if you remove the replacement costs from your personal property, a lot of times that's a savings of around like $250 on that policy for the year. So little things like that, you can definitely rework or kind of play with the numbers to see what best fits your needs.
A lot of times on these citizens policies too, I run into 1,002%. So 1,000 on all other perils and 2% on your hurricane. It's a huge savings within, especially if you go to 2,500 on all other perils and 5% on the hurricane. So for example, if you had $100,000 policy with citizens and you had 1,002%, the 2% would be of your 100,000. So if you had a hurricane, you would pay 2% of the 100,000, $2,000. But with 5%, easy math, 5,000. So again, it's we've seen savings of upwards of $800 just by changing those deductibles. So it can make a pretty big difference if people are looking to save on the policies.
Great. Anything else you guys want to add that might be of interest to folks looking for manufactured home insurance?
What do you got?
I would say when you're looking, just try and shop it around. Make sure your agent's doing the right thing, reaching out to all the carriers that are available for you, and make sure they're explaining it to you. You want to understand, what you're insuring your home for, and just ask questions. Don't feel guilty if you're asking too many questions. More questions is better.
Absolutely. And one thing I did want to touch on is citizens requiring flood insurance now. So if you are in a special flood zone, citizens will actually make you carry flood insurance. And they're saying by 2027, regardless if you're in a flood zone or not, citizens will make everybody carry flood insurance. Now, citizens is the only one doing that, so I want to make that known because that's always a big question.
Now, is this flood insurance only available from the National Flood Insurance Program, or is it private, or is it both?
Um, I guess for the manufactured homes, it's majority going to be the National Flood Insurance Program. I'm not too familiar with too many excess or surplus lines carriers that will insure manufactured homes for flood. A lot of them we have to end up going through the NFIP carriers, which is a National Flood Insurance Program carriers.
But that insurance is something they would also get through their agent.
Yeah, absolutely. We can do that and shop it around for you.
Yeah, it's not a separate program you go online and talk to the government or something.
Nope, no, we'll help you out.
Great. So, how do folks looking for your help get a hold of you?
Give us a call. Our office line is 727-579-9956. I can also shoot you our emails, so you can have that. That would probably be the best way is phone call.
Thanks. I'll be sure to add that to the show notes and I'll get your emails in there as well.
Perfect.
Thanks for coming on the podcast and enlightening us on insurance. I look forward to working with you further in educating current and future Floridians on the insurance industry. Anything else you want to share?
That's pretty much it. I want to thank you for having us on here, and that's it.
Yeah, thank you.